As we continue,
Sure.
I mean, this whole idea of fiscal responsibility in Indonesia has been a challenge for quite a while, right? The country's made tremendous progress, so props for that. But, you know, with the SOEs, one issue has always been, and you know this as well as I do, right? The government has traditionally used SOEs to channel or funnel money through them to get under that 3% constitutional limit cap, budget deficit as a percentage of GDP. This is called below the line spending, right?
Yeah.
Do you intend to address that issue?
Yeah, so this is actually good that you asked that question because in a way it disciplined the entire system. So things that are below return hurdle. So if you look at our return hurdle, probably you can look at it as our 10-year, 15-year, 30-year sovereign rating. And look, if anything is below that, that should be used for the need for the state and should be using under the state budget. But if anything above it, when there is return that we can generate, then it should be under Danantara. The idea of Danantara is to be able to introduce capital formation, being able to bring technology, knowledge by investing in companies or in projects that can help support Indonesia's growth. So, I mean, this is the big picture thinking that we're doing.
Pak Pandu, JP Ong here. Selamat pagi. And I'm glad you brought up the idea of return hurdles. I am curious, based on the investment perspectives of Danantara, what are those investment hurdles? What are those ROE hurdles or bars for investment that Danantara is targeting? That's and the standard for the deals that you're trying to accomplish in terms of trying to achieve those returns and make sure you get the best returns for the near $1 trillion of assets that are now under your stewardship.
Yeah, I mean, it is a big asset that we need to be able to grow consistently. So one of the things that we need to is also focusing on risk management in terms of return too, you know, as long as it's in excess of that cost of capital that we have, we should be okay. Don't forget, this is the issue of large asset managers is how to generate consistent return. So, you know, one thing that we are doing is focus on themes and thematic. So, for example, we look at energy transition, we look at healthcare, we look at digital infrastructures, we look at food security, and also energy security. These are things that we think are very important for the next 2 decades for Indonesia's growth as we enter a developed market stage.
And could you talk to us about the risk management protocols within Danantara? Because one of the concerns also, as you try to manage this massive sovereign or this wealth fund in Indonesia, is really making sure that the proper controls are there to make sure that investments are done with risk prudence in mind. Can you give us a brief flavor of how you're approaching risk management within this behemoth of a fund, sir?
Yeah, so this is great because all eyes is on us, especially domestically, and I think globally too. We're getting so much attraction here at the Milken Conference here in LA. A lot of questions on governance, which I think is proper, given that the listed companies under Danantara also represent 1/3 of the stock market in Indonesia. So I'm glad at least in the public side now there's stronger confidence in Danantara, given the performance of the stock since we were first announced, up 15%. You know, with us, we essentially behave almost like a public company. We will report with respect to our progress. We'll report publicly also in terms of our performance. So think of us almost like a public company, even though our only LP is the government itself, right? But, you know, we will, you know, progress and continue and learn about the best practices from our peers. You know, the size of this business too, don't forget, Danantara is the 6th largest sovereign fund in the world. So we have to behave appropriately and think in a global scale.
So it seems to me also that there's a bit of a dual mandate for Danantara. One is to support the development and the development of the Indonesian economy in key sectors, but also to make sure that you can also look at the best returns in a global market. I'm curious, is there an initial split for investments that Danantara is looking at between what you're looking for with regards to local versus global investments? I mean, is there a 30-70 split? Is there a 45-55 split? Or is it a bit more flexible than that, sir?
Yeah, the first focus will obviously be domestic, but given the size of dividend, if you look at dividend every year, about 10 billion over 5 years, that's 50 billion of unencumbered capital. So if you put leverage on top of it, it can be close to $250 billion that we need to invest. So it most likely will be global in nature. But whenever we invest, it's not just about return. We have to be able to bring transfer of knowledge and transfer of technology.
But, I'm sure at the Milken Global Conference there, it's quite an event, right? You're probably getting, nudge, nudge, wink, winks, and good-natured jokes about 1MDB still. It's only been about, 2-3 months, right, since Danantara started. One of the easy ways I think you could push back against that and end it once and for all is to align Danantara with the Santiago Principles. And Indonesia's first sovereign wealth fund, INA, does align with the Santiago Principles, which is basically best practices globally for sovereign wealth funds. So why doesn't Danantara just do that?
No, I think that's another way. It's actually good that you mentioned that because INA already did it. So it was a good president. We have a couple of our members, both Arif and Stefanus, who was vice CEO and CIO of INA, who moved into Danantara. And this is obviously the next step we're doing as we're finalizing our teams. Again, this has only been a 3-month-old entity, but that's actually one of the targets in the investment side of our business. But thank you for opening up that line of question, Mark.
And I was listening to you on a podcast with some young people in Indonesia. I think it's called the Wee Wee podcast. It was kind of cute.
Wee Wee
right?
podcast.
Yeah. And you were great on it. You spent about an hour talking to these guys very, very patiently. One thing you mentioned to them that could help this whole issue of governance transparency and also potential corruption or patronage is slimming down the size of SOE boards. Right now, they're averaging about, 12, 13 people. You were intending to, I think you plan to have that. Have you been successful? How many boards have been able to shrink to that size?
So all the banks that have announced their new board, we shrink from 12 to 6, Martin, and that will continue. Even the president mentioned at the town hall, we will continue to shrink that board from 12, I think, to 5 to 6. And we'll make sure that all these board members are non-political and each one have a role in the companies that they serve. So before it wasn't like that, but today we want to make sure every single board members have a skin in the game and have a say and be able to bring value add to the businesses that they serve.